Hi, welcome to the Market Alert for Wednesday, the 11th of March 2020. So stocks and oil, dead bat bounce on fiscal dreams, but credit crash continues. As the tongue-in-cheek and sarcasm says here, all is well, which of course should have not on the end of it. So let's have a look at the dead bat bounce, as it's now being called, as opposed to the dead cat bounce. This is it yesterday in the daily chart. You can see prices reversing up 1,600 points, more or less a straight reversal, probably 76% retracement of this bar actually. If I click twice on the high of this, there you go. So we've got a 76% retracement yesterday of Monday's down move, and prices are now heading south. And this is going to be a characteristic of this, as we saw here. And then the market continuing to move lower, and that's the way it's going to be unless we get QE4, more reduction in interest rates. The 0.5% cut in rates made absolutely no difference whatsoever, as we've seen last week. So they've probably gone back to the boardroom, have a think about it, see what they can do to make a difference. And the only way they're going to do that is to buy the stock market from the Fed with trillions of dollars. That's the only way they're going to do that, if they're allowed to do that. Who knows? The madness continues. So yesterday the Dow moved lower, stopped at the 200 bar MA, traded up to the 76%, broke below the 200, sailed to the downside, found support, market tested, came back up, came back to 76%, went back up to the DP level, came back 76%, bounced up to the DP level, created a double top, came back to the 76% retracement, and eventually broke through the DP level, through the 200 MA, and traded back to the highs. No surprise there. Plunge protection team doing their job really efficiently. However, overnight the market has seen futures being sold into it. The cash market keeps on selling as well. As soon as it opens at 2:30 p.m, it takes the plunge protection team to bring it back later on in the evening. News today, not that we've going to make a lot of difference. The Wheeling Mnuchin out at 2 p.m, half an hour after the Dow was open, so expect a bit of a rally. He's the Treasury Secretary. Trump's right-hand financial man, former Goldman Sachs, no surprise. So expect a bit of a bounce there. All the rest, we got the budget from the UK today at 11:30, but otherwise all eyes focused still on crude oil and the stock markets. And implied volatility, this dropping yesterday, which you'd expect because the market was up 1,600 points. A bit of a pullback on this. Needs to take the froth out of the market, as it were. So you can see this, but continuing to be red on the visual one there. You can see the color-coded one with prices sideways to higher, but of course overnight continuing to move to the downside. So yeah, that's a quick roundup of events. I would expect this more of the same, really. Look at the weekly chart. Again, we're heading back down towards the 200 MA, and in the monthly chart we're also heading south as well. And in fact, before I finish here, let's just have a look at this. From this low to this high, you've got 76% retracement there. So keep an eye on the monthly chart if things start to sell off in the daily, because a break below 23,509 sends us down to this low over here. After this, we're heading down to the 2016 level for the market, should they allow it to go that far, of course. Okay, that will do it for this one. If there is anything to report with regards to circuit breakers, etc., I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.